We are seeing severe economic challenges right now today. If you look at the banking sector, they are starting to make some serious changes, and I want to bring those to you. I want to show you what's happening deep inside the system and make it real easy for you to understand. Today, we're going to look at some details that is important for everybody, even if you're not inside the financial world. So let's get in, truth seekers. We'll begin with this here. You've probably seen this information and similar articles about it, but essentially, Walgreens to close 150 stores across the US as pharmacy chain faces emerging challenges. Those challenges they're referring to, one of them is the fact that there are way too many shoplifters. Theft is becoming a serious problem. You also have the input costs that have been rising considerably. The products that they are purchasing are more expensive, and so they can only charge their customers so much. And all of the wage increases and everything else that they've been dealing with, just like all other businesses, are having a compounding effect. So they're going to go through these stores, look for the lowest performers, and they're going to be shutting them down. That means people are going to be out of a job. They'll have to get new ones. This is part of what we are seeing. They're not the only chain to do that. We've seen several examples. If you look at that, that's the short term. If you look at the longer term trajectory, it is going towards a more, let's say, online model. Number one, and number two would be the model where you walk in, you speak to the clerk goes to get what you need, they bring it to you at the front, kind of like that curbside pickup where you are simply going to the physical location only to get the products that you need. That will be just a simple transition into later on actually just doing it all online. So those are the things, longer term trends that are certainly making all of these retail locations look very unattractive. So watch what happens with corporate debt, but also more importantly, the commercial mortgage-backed securities. Two very important things that you should be paying attention to. That's that. You have the US consumers losing steam, setting the economy up for a sharp slowdown. If it really depends on who you ask. I've seen data left, right, and center on this, but you could see it for yourself. Inflation-adjusted spending is essentially flat since January. Price pressures easing, though underlying inflation has been elevated. Again, these statistics you got to watch out. You got to be clear. That's why you're here at the Money GPS, because I'm going to show you all angles of this. I'm going to give you the angles that are the government sources. I'm going to show you the alternative stats, and then I'm going to make sense of all of it together. I think that's really important to get it from all sides, even the official. Why would I do that? Why would I look at the official stats when we know they're manipulated? It's simply because the corporations, the businesses that hire people or fire people, right? If we look at the government itself, if we look at the Federal Reserve, all of these are looking at the official statistics. They're not looking at John Williams' shadow stats. If you want to know your own stats, I would even argue not to look at any stats. You got to look at your grocery bill. You got to look at those things year over year, and you know it for yourself. Because if you live in Texas, it's a different story than if you're in New York, and so on. I know for myself, when I see my bills, I don't get them. They don't go down. Maybe if my usage goes down, if I buy less food, I might, maybe. But that's not the way it works, right? We're seeing prices going up all over the place. Yes, there is what they call greedflation, and that's what companies will do. They will push their prices to the absolute limit, and they will try to see how many customers do we lose by increasing our prices. I know for myself, my input costs in my business, my e-commerce business, have gone up quite a bit, and that is in all areas. Oh, the workers want more money. Okay. You got to have all of the products, whether it's the steel, whether it's the aluminum. Oh, all of that's gone up. Okay, those have gone up as well. Oh, the shipping costs, those have gone up as well. Oh, the fees on Amazon, those have gone up as well. Everything's gone up. Everything has gone up. So it's not just when they say, oh, it's greedflation. It depends on the company. It certainly does. Okay, depends on what you're selling. Depends on what you're dealing with. That's a big issue. Okay. So you got to watch that, and you got to price that in. You got to know that if you're going to get into Amazon, if you're going to get into e-commerce, if you're going to get into businesses, you got to have somebody, hopefully, who's already there in front of you to be able to tell you, don't do that. Or that's going to be good. Don't worry about it because of this factor or that factor. So you want somebody who's already a step ahead of you, especially when you're starting off brand new. Okay, we have some issues here. If you look at it, inflation adjusted spending was little changed in May and has essentially stalled since surging in the first month of 2023. You got to look at the inflation that they refer to, whether it's the CPI, whether it's the PCE. All of these stats are the official stats, and ultimately the Federal Reserve's heavily manipulated stat remained relatively high, which is funny because they use that on purpose so that it's excluding the what they call volatile food and energy, and still the prices have gone up. Now, this is where we talk about the yield curve inversion. What is the yield curve inversion? You've heard me explain it before, I'm sure. But essentially, that is if you're going to invest in a bond, if you're going to buy a 30-year bond, you would think the 30-year bond is going to give you a more attractive rate than if you were going to buy a 1-year bond, right? That would make sense. However, it's flipped. Okay, so that's what's happening today. Whenever we go down into a yield curve inversion, whenever this happens, when it rises back up, that's the signal that a recession is imminent. At the same time, in this article here, there was an interview with Scott Minerd from Guggenheim Investments, and he said that, and by the way, that was from a few months ago, and he was bang on. If you listen to it, he was bang on. But he said essentially that what we have to do is we have to look at this really for what it is. Let me show you, okay? The yield curve inversion tends to take place and stocks will peak 3 to 6 months, 3 to 6 months during this, just before this recession hits, okay? So you get the stock peak, 3 to 6 months, then we get a recession officially. That's what he said, and I wanted to make that clear, okay? Curve inversion at historically extreme levels does not currently reflect elevated recession risk, but instead is largely related to expectations for cuts alongside inflation converging to target. That's what they're saying. That's the Bank of America. Bank of America has suggested that what you are seeing today is not a problem. Everything is okay with a yield curve inversion. I don't know how that's possible, but that's Bank of America. Congrats, Bank of America. Whatever, we'll just go with that. I bring you what they say. Remember, I bring you it from all angles. Okay, here we have it. Private credit and hedge funds are flooded with loans as banks dump the debt. Very interesting. I thought this was a concern if you've seen this. Basically, these banks, the regional banks and so on, are trying to get rid of what they've had before. There's a lot of this bad debt, asset-backed securities that they are just trying to get rid of. Billions and billions are coming off of their balance sheets right now because they saw what happened with SVB and the others, and they're doing their best. Imagine it's like a boat. There's like 20 holes in this boat, and they're plugging them up. They're plugging them up all over the place. And that's, of course, not going to be a good thing. If they only have 2 hands and 2 feet, how are you going to get all 20 to be plugged up? Okay, so that's what we're dealing with, and I wanted to show you a little bit of insight into this because it really explains a lot as to what's happening. Here we go. You could see U.S. regional banks and finance companies are increasingly selling off their consumer loans as funding them gets harder and more expensive, flooding private credit firms and hedge funds with requests to buy the debt at a discount. So whenever we get this debt at a discount, it could present itself with a problem. At this point here, not so much, but we're going to see how they absorb it. How do they take it? Are the hedge funds going to lose a lot of money on this in the end? That would be a problem, okay? Consumer lenders are just getting charged more for the costs of finance. As the cost of financing goes up, this leads either to higher rates for consumers or decreased availability of financing for those who have already been paying the higher rates. Again, I'm just trying to point out that during this time here, you have a tightening cycle, and that's going to continue to create problems. This is just one of them, one part of the whole. Regional banks are the big thing to watch. Okay. Next aspect, really quickly right here, you could see it. thousands of port workers in Canada's British Columbia go on strike. UPS recently, they were going to go on strike. They resolved that. A lot of these different businesses are dealing with this. And of course, that impacts you. So they are going to end up paying them much more money. As a result, you, the individual, will end up paying more to get your products. I can tell you that for sure. Britain faces a giant water bill and nobody wants to pay for it. I'm just trying to show you different examples here of how you're going to in the end pay more through taxes, through inflation, through one means or another. This is talking about Thailand. The Thais have a debt problem. About a third of the people in Southeast Asia's second largest economy owe a total of the equivalent of $424 billion to regular lenders, plus an estimated 1 trillion baht borrowed from loan sharks. Okay, so I'm just trying to show you that there is debt of all kinds right here, and it's coming at an interest rate, and you just keep on rolling that over. That presents itself with a problem. Thailand, US, UK, people need to pay more. As a result of that, you've got to be paying attention. I'm not telling you that if you got to pay more, that you should sit in your home and do nothing. No, you've got to strategize. You've got to realize what's going on. Okay, this is the problem. Now let's work to it. We are not going to just sit there. We are not going to be on our knees and just take it. No, that's not what we do. At least here at the Money GPS, we get the information that we need and we take action. That's the way it works, all right? Uruguay drought capital hit by water shortages. This is, again, I'll keep talking about this every day. You got to get your preparedness on. Do you have a garden? Do you have storable food? Do you know a farmer? These things are key. Maybe you're not a farmer, but maybe you know one well and you kind of strategize with that person, okay? Good stuff. Do that. What happens if Russia blocks the Ukraine grain deal? This is another one because, of course, what's happening here is Russia saying, okay, we're not going to, come in the way of this. The grain can be exported because that affects other countries, including Iran and so on. However, this is the type of thing that we are just way too reliant on a system that could be disrupted in an instant. So watch that very carefully, okay? Don't sit there on your hands and don't be on your knees when the time comes. Get your situation in order. I wanted to pull this video up here. It's talking about the HSA tax loophole that I think everybody should be aware of. This is just one aspect, but it's part of the financial education series. And I wanted to show you this because a lot of people, they are making the wrong investments. They're putting their money into their 401k, and that's the end of that. When you've got to look around, you got to diversify. For some people, the HSA is the right way to go. Okay, so I put this right up here. Click it, and I'll see you there.